ladies and gentlemen, we want to start our mining panel, a bit of education here, also a bit of good insight into the companies, of course. And as mentioned, we have the opportunity again to speak of three highly recognized professionals here with top producing companies, very successful companies, making a lot of money for the shareholders, and all three are dividend payers always. And you know, dividends are one thing which are really important by now, but also for the future. And I think there's a big possibility that you will increase that in the future. I want to start with a little bit of a general question, which is really on the high rise in the media. We saw a lot of mergers. We saw a lot of big companies going together. I call it merger mania. I would love to have from each of you the take on that, because on the one hand, you are big enough to do also something like a merger, but on the other hand, maybe you could be a takeover target. We don't know. We don't hope for that. But first of all, Sean Boyd, what is your take on the merger mania in the sector, please?
I think it's long overdue in terms of there's too many players and not enough high-quality opportunities. The question is, how do you do it in a way that creates value for shareholders? But I think the important question now is what does this mean when you see zero premium transactions? What does this mean for future deals? Are we in a low premium environment now? I think that's the question that a lot of the smaller companies would have as they build out their asset base. Number one. Number two is I don't think the big guys are finished. I don't in any way think that Barrick's finished. There's a competitive tension among the top 5 market cap companies in the world, with the exception of Agnico. We're in that mix. We tend to mind our own business. We've always been a company that, with all due respect to the bankers, we tend not to listen to the bankers. We tend not to listen to the bullion dealers. We tend to keep to ourselves and do our own thing in a low-key fashion. And we can see an opportunity, as we've said to our shareholders and potential investors here many times, to be able to keep doing what we're doing. So it can be healthy. We love the headlines. Finally, we get headlines that actually make the financial press to remind people that we're still here as an industry, and a lot of companies have actually done some heavy lifting and improved their companies. So I would expect to see more. Hopefully it's smart deals that enrich the shareholders and not just the management teams.
Mm-hmm. Sean, what's your take on that?
Well, I'm probably the only guy on the panel that's actually done a deal with Sean.
No, I haven't.
And one of the only guys in the mining industry that's ever done a deal with Sean.
Yeah.
Because as he said, Agnico tends to stick to their own knitting. And they've been extremely successful with that model, and I agree with Sean's model. It's about your assets, it's about your shareholders. You got to make money every day, each and every day. And, the way that Agnico has grown their business, they've had their ups and downs. They built 3 mines at one time
5.
together. 5. Wasn't easy.
No. The lesson we learned, don't build 5 at one time again.
So, I take a lot of lessons from Sean in terms of what's been done. And in terms of, people that have built mines and made money for shareholders. There are not many of us in the business that have actually had a positive return to shareholders throughout the entire evolution of our business. And I think that you have to pay attention to quality. Being bigger does not necessarily make you better. Mm-hmm. There's an old adage that says that 2 handfuls of shit just makes a bigger handful of shit. Perhaps that's a little politically incorrect today. But I stick to the quality discussion. I am not a value player. I am a quality player. I believe in context. I believe that you have to have tier 1 assets. I believe that you have to focus on bearing down and not just playing banker games. As we all know, our friends in the banking business are here tonight. Banker only rhymes with one word. You can figure out what it is. It's mostly a British term. But, we at Osisko, we've only done really one thing our whole business career is look for brownfield camps, try and discover value and try and add value through drilling, and that's what we do today.
Mick?
Well, I think Sean said it well when it's long overdue. And look, we're sort of cheering these guys like Mark Bristow and Newmont with Goldcorp. We want them to be successful because for too long the gold industry's it's been on the nose with investors, with the sectors. You know, the generalist sectors have looked at gold and said, why would I invest in gold companies? Because they've destroyed so much value over the last 15 years, present company accepted. And, you know, so we need to reinvigorate the enthusiasm for gold as an or gold equities as an investment. And so we're really cheering for them to do well. You know, and someone said to me today that there's one common thing amongst all three mergers that have occurred between Barrick and Randgold, between Goldcorp and Newmont, and Tahoe and First Pan American, is that each one of those, the management of one group gave up. They've had enough, right? They gave in. And I guess you know, that's telling. It's telling. It's saying that there's another management group here that can make more money and do a better job out of the assets in that company. And so, you know, that's an important thing that we should always look at. How do we create value in the industry that's going to benefit everybody, including our employees, our communities, and our shareholders, and the governments that we work with? Because we're not here to waste money. We're not here to do a bad job. But if it's not being run well, then people need to take notice of it. So look, we're cheering them on. We want them to be successful. I mean, I think there's a degree of madness in taking on the second biggest gold company in the world and then the biggest gold company in the world at the same time. That kind of didn't make sense to me, but thankfully common sense has prevailed in the end.
Fantastic. So you would agree, all of you, that organic growth has priority?
I'm in.
Yeah. Look.
Genau.
Yeah.
I'm very genau on that point.
There's no better way to create value from your own assets. I mean, if it's there.
Exactly.
You know,
it's there. Yeah.
It's there.
That's the point.
You've got it, and you've got to work them hard. And you know, every investment you make has got to be a good decision, but it's a lower risk decision because you own it. You should know it better than anyone else.
So I would add, you know, there's also the color of the world as we go forward. Obviously, you know, we have a clash of the titans between America and China right now, and to some extent Russia. You know, who wins this sort of combat is going to decide a lot about what commodity prices do, because, you know, copper and zinc and iron ore are kind of the fundamental basis of all this stuff. Gold's a bit of an anomaly in that it's really a sort of a flight of capital to something safer than the currencies and fiat currencies. So where we live now, I think, is in a very fragile environment. We have Brexit. We have many other exits, you know.
Ital exit.
We can go through the entire continental European situation. As to who's leaving first. I don't think the real discussion about who's staying, the discussion about who's leaving.
Germany stays for sure because they pay the bills.
Yeah, well, you can run a pretty good general store if you lend everybody money.
That's right.
But you know, I think at the end of the day, the commodity prices will be driven by the fact that, you know, there's a level of fragility in the world that we haven't seen for a while. We haven't seen a generation of young people so pissed off as they are right now about what's going on. We see it in France, we see it in Belgium, we see it in continental Europe. I mean, there's a lot of fragility in the belief system as we see it. So I think that gold is the natural winner of this discussion. I think that in North America, we enjoy a bit of a distance to that discussion. And, you know, we've seen Canadian stories coming up in value. We saw the Australians sort of come in and start to invest in North America. And correct me if I'm wrong, but I think that's a trend that continues this year. 2019, 2020 will be the years that the Australians come into the U.S. and Canada, and we'll see the price of those assets go up, which is my bet.
We're coming for you.
Sean,
I've got the poutine ready.
Sean, you want to add something on that?
Well, I think it's important. We'll certainly get a sense of what's happening with physical gold from John Reid. But I think what's important to know in the context of M&A and building businesses and focusing on quality is in order to get stocks to go up, you need investors. And the industry has not done a great job over the last little while of running businesses in a way that would attract quality capital. And we're faced with active money moving to passive. We're faced with shrinking resource or specialist investors. So there's no other choice than to attract generalist money into the space. And generalist money is gradually concluding that, in our view, that at some point they need to have exposure to the gold space. The question is, how do they do it? And so we take a lot of encouragement from what we've seen in the last couple of years, because we get an opportunity to speak to a lot more generalists than most of the industry, and they're clearly doing their homework. So I think that bodes well. And if we can keep things simple, run high-quality businesses, focus on returns rather than volume, etc., then this industry is going to do very well and be fine.
Fantastic. So you have almost answered my next question, because that would be like, have the generalists returned to the sector, let's say of our forgotten sector, and respectively, have they already rediscovered your companies?
Yeah, we don't really see it where there's a sense of urgency among generalists to get exposure now. They're waiting for a catalyst. Everybody's trying to pick what that catalyst is. People generally conclude that it's the gold price getting through 1360, and that kind of makes sense. And so we take encouragement that the work's being done. It will be done. When the gold price cooperates, then you could see the floodgates open. And we've seen this many times in our career is, people tend to chase these stocks, and they'll chase the bigger, higher quality names first, and then it sort of works its way down through the system. So it's poised, and we look at equities relative to the current gold price, they're undervalued. We look at businesses having been improved over the last few years. We've got to make sure we don't spoil it by bad, stupid M&A. We've got to make sure we don't spoil it by, if the gold price goes up, we're not calculating reserves at a much higher gold price that diminishes the quality. There's lessons learned from that time, from the last time, and I think we kind of all get it. So we're set for a pretty good run, we think, in the equities.
So my add to that would be is that Sean has obviously run a good business, and he's he's the longest standing CEO in the mining business, I think, at this point in time. Are you not, Sean?
Probably 21 years.
Yeah. So, and I'm just 16 years in. So we've seen a few cycles between the two of us, Mick, and I don't know your history, but I'm sure you've had a few years at it.
We are all dinosaurs.
It's all right. You're too kind, Sean. Too kind.
I do what I can, I'm not the smartest guy on the stage, so let's start with that. What I do have is, work ethic, and what we do bring to the table is that we're always a context player. We don't really worry about the commodity price as much as some. We always worry about the quality of our assets relative to everybody else's. So we don't focus on the gold price, and we don't try and predict the gold price as much as some others. So we're only really looking to be quality jurisdiction, quality asset, and something that can be a world-class gold mine. We built Canadian Malartic. Our history there was we bought the thing for $88,888 out of a bankruptcy. Barrick had sold it for $1 2 years earlier. And Mr. Boyd and his friends were good enough to cash us out about 4.1 billion at the time. That's the play.
Canadian, 4.1 Canadian.
4.1 Canadian, yes.
Right.
You don't forget about the Canuck bucks. So we don't really have a complex plan. We're very simple people. We just look for good assets and good jurisdictions. We drill them out, we de-risk them, and we try to put an asset on the table that's going to deliver returns to you who sit in the audience today as shareholders. We think that that's our job as a smaller company. We took the company, we IPO'd one morning on June 14th for 450 million. We closed the day at 750 million. We're now at 2.2 billion. We keep it simple. We just find good projects and drill them out.
Perfect. Mick?
So look, the generalist investors, they're not actually rushing the doors right now, but I do think that, you know, in the meetings that we've had over the past 12 months, there's been increased interest. We are getting more meetings with generalist funds, ones we haven't met before, and they're asking the right questions. And so I think, you know, Sean stated it well, and he said they're sort of poised, they're doing the homework, and they're very selective though. So they're only looking for low risk options in the equity space. They've heard all the stories, or they know the stories about how the gold equity market blew itself up the last time around. So they're very cautious and they're doing lots of homework. But I don't know, you know, I'm not as experienced as Sean with these gold cycles in gold, but I wouldn't be predicting that the floodgates would open for that very reason. There's a lot more discerning investment going on now, particularly from the generalists, and but they are looking for quality stocks. So that's what we try to be, you know. And what a quality stock is today in the gold market is one that focuses on cash flow, focuses on return on investment. You know, it's a real business. Someone said to me last night, he said, you know, people buy your shares because they're betting the gold price is going up. And I said, have you not been listening for the last 6 years? People buy our shares because we make money, and if the gold price goes up, that's a bonus. And that's what you call a strong return on investment capital. That's what you call a quality gold equity. And I think that's what the generalists are looking for. And the more of us that can do that, the better reputation we have and the more equity will flow into the sector.
Mm-hmm. Yeah, fantastic. No, it is absolutely like this, and let's see when the generalists will move finally, but something will happen for sure. Other question on, let's say, investing philosophy, on the investment universe itself. Are the new products and philosophies, such as passive investment schemes, for example, ETFs and quant approaches, tampering with proven strategies from decades? What is your take on that? Because you are like, let's call it the old world, the real solid world. Yeah, you are real sustainable assets. You are producing real gold. Yeah. On the other hand, we have a lot of call it hyper products created from somebody, and probably you always have a bank against you.
Yeah. Well, I'll start with that one if I may.
Okay, Mick, go ahead.
Yeah. Look, the World Gold Council actually created the first ETF, the GLD. And it was successful beyond their dreams, right? And it's, what is it, assets under management, I forget now, it's $90 billion or something. Anyway, what it's done is it created a whole new investment platform for investors to invest in gold. And, you know, it's a safer option because, you know, obviously it's linked to the gold price. And it's very liquid, so you don't have to go and lug your bar down to the bank. You can, you know, just sell a few shares electronically. So that really works for investors that want exposure to gold but don't want the risk associated with mining. But of course, it doesn't give you the torque. It doesn't give you the torque that equity stocks or mining stocks will give you. And I come back to the point before that for those companies that do it well, that give a return on investment, they're a very compelling proposition compared to the ETF because it'll give you a higher return than just putting your money in an ETF. So it is another proposition. It's shrunk the equity field. It's made us be much more disciplined and much more focused on what we're actually there for. You know, digging stuff up and creating gold and not making any money is wasting everybody's time and destroying the planet in some cases, and that creates a bad reputation. So it's not a bad thing, right? We need to do it more responsibly, not just from an environmental community perspective, from a commercial perspective. We need to make money. We need to make a return on investment. And so our companies in this panel and a few others will always be successful if we follow that model, even if there's ETFs.
Sean?
I would defer to Mr. Boyd.
Well, just part of that is, the advent of the ETF, facilitated demand, obviously, and there was some grumbling within the gold mining space that we're sort of cannibalizing our own investor base. Well, maybe, but in reality, all that did was force discipline on the gold mining space. So we welcome competition, whether it's from cannabis stocks or whether it's from cryptocurrencies, because at the end of the day, we're providing something that nothing else can provide. And that's leverage to an asset that's simple, easy to understand. And once you start layering risk and complexity on top of a gold bar, like a cryptocurrency, you lose people. And so we've got something that's been around for 1,000 years, and if we keep our businesses simple, and we just look at it as a risk spectrum. You got the gold bar here, everybody understands gold price risk. And then you've got mining business along that spectrum, and if you're down at the low risk end, and that's why the royalty companies have been successful, because they provide a low risk way to get leverage. We would argue a quality gold miner gives you more leverage and a commensurate risk. And if we keep in that space, then we can have lots of competition, because at the end of the day, we will still win if we stay focused on delivering those returns there.
Fantastic.
So I would just add a couple of comments, and obviously, Sean has a lot of insight in this world, and I'm the newest royalty company in the space. 4 years and 7 months ago, we started Osisko Gold Royalties.
Thank you.
Because Mr. Boyd was nice enough on one Sunday morning to allow me to start Osisko Gold Royalties. We had 2 Starbucks coffees.
Thank
we
you.
were both in our jeans.
Do you need $20 for a haircut, by the way?
He still hasn't spent it.
Mr. Boyd points out a good fact. I have said that I would get my haircut at $13.50 gold. And now that I got $20, I know how to finance the haircut. So at $13.50, I will get the haircut. I will thank Mr. Boyd for allowing me to start Osisko Gold Royalties. And the interesting thing that's evolved as we've become Osisko Gold Royalties, and we've been able to sort of create what we call the accelerator companies, is that we've kind of created this hybrid. We're not really a pure royalty company at this point in time. We're a hybrid. We sponsor these accelerator companies. We're the biggest driller in Canada. Last year we had 41 rigs turned. We have 21 rigs turning at Windfall Lake, 8 rigs turning at Barkerville this morning. So, we're back to primary wealth creation. I mean, Sean doesn't talk about his exploration much, but he's probably the biggest explorer in the world at this point.
We spend a fair bit.
Agnico and ourselves are leading the charge on exploration. We invest more in finding new ounces than almost everybody else in the Canadian space. And we have a lot of footprints around the world, and that's priced into his stock somewhat, it's priced into my stock, it's priced into Mick's stock. But if you don't look for new ideas, if you don't create new wealth, the whole model doesn't work. We can't just sit and be ETFs. The ETF doesn't work unless somebody finds new ounces, because every ounce that's mined is an ounce we have to replace. So the ETF model has a stagnation point, and I think we're kind of at it. And unless the ETFs decide to start drilling the rest of the world the way we do, they will not succeed. So when I look at the ETF model, and don't get me wrong, I'm a royalty company, so they own almost 19% of my stock. But they own it mechanically with a computer that I've never had a meeting with. So it's a little hard to understand what they want from me.
Yeah.
But I do stick to one fundamental value, and that is we drill, and we find ounces. We create new wealth each and every day, which is something that an ETF cannot do.
Perfect, that's right.
Maybe I just add one other consideration when investors are looking at the space, and it was something that was paid very little attention to, which factors into a lot of decision making, and that's around sustainability and ESG. And each and every year it's become critical. And we were at a lunch here last year, and I noticed that one of the fund managers' card had changed, and the word sustainability was added to the card. And we asked, well, what is your role now? Well, we screen every industry for rankings as it relates to sustainability. And if you're not in the top 10% of your industry, you are uninvestable to our bank. And so you can take it to another level. We heard today that there's one bank, and this fund manager's having difficulty convincing the people that run the bank that they should increase their exposure to mining shares. Why? Because the people that run the bank look at mining as a dirty industry. How can we put that dirty industry in our clients' accounts? So we have a real uphill battle, and the answer is actually quite simple. Most mining companies do things right. Most mining companies make major contributions in communities that are have-not parts of the world, and we don't do enough to tell that story. And so we're being forced to focus on that and to be a little bit more sort of get out of our normal modest selves to tell that good story. And that's going to become increasingly important as we make the case that we're getting the returns, but what are you doing as far as sustainability and benefiting the communities you operate in, and doing it safely, doing it with renewable energy, and respecting environmental regulations.
Yeah, we had this discussion last week at the Invest Fair in Stuttgart with 13,000 people in 2 days, and a lot of people came to the booth and said, mining, dirty, I don't like it. And then I said, why is it dirty? They have no clue. And that's something really I urge you guys to communicate much, much more. Because to my understanding, to be honest, I think mining is the best development aid in the third and second world, what you can do. Because you are going very often in remote areas, you are going often in areas where there's no clean water, no power, no roads, no sewage, no medical aid, no education. And when I listen to companies who invest in Africa and building mines in Africa, for example, that's the first thing I hear. Or we have taken care of 5,000 people, 10,000 people. Yeah? We fed them. We showed them how to do agriculture. We educate them. And I think, really, you have to say this to investors, and you should communicate much, much more. Because what you are doing, aside of the investors' money you are getting, is so much more worth in addition, because finally you are protecting your businesses. Because when your employees and the people are pro-mining, you will never have a problem, right?
It's very well said.
Yeah, thank you.
Absolutely.
I try to.
Hard to add to that.
Let's come to your companies. Mick, what excites you most when you think about your companies?
Yeah,
your
so thanks, Joachim. Since I was here last year, we've had a lot of success in New Zealand. We are the gold industry in New Zealand, albeit rather small by the world standards, but the acquisition of Waihi in 2015 has been an absolute knockout success for us. We've now got 2 million ounces on the books and growing rapidly. We paid $100 million for this asset in 2015 from Newmont, and there was 400,000 ounces on the books, and we've produced 500,000 ounces since, and we've got 2 million ounces now. We've got 10 rigs on the ground there drilling flat out. We've got the permit for the new underground beneath the open pit, which will extend the mine life for another 10 years at 100,000. And we've made a new discovery 10 kilometres away, which is initial maiden resource of 635,000 ounces at 14.5 grams. And that'll be mined and treated through the same plant. So now we've got a pathway. We can see a pathway to taking this to 250,000 ounces a year within the next 5 years. That's real growth, and from organic growth, and a real focus on the importance of doing it right, doing it the right way. It's part of a community there at Waihi where the mine is in the town. New Zealand has got very high standards when it comes to environmental management and social responsibility. So we do that in spades. And this is going to be, decades-long operation with, 200 to 250,000 ounces a year. Great asset for the country, great asset for our people, our workforce and the people of Waihi, and of course a great asset for our shareholders. So that's real value generation, and we can now see that, plus the expansion of Hale, the ongoing operation of Macrae's at around 160 to 200,000 ounces a year, plus our flagship in the Philippines at around 120 going for the next 12 years, plus copper. We'll be producing 750,000 ounces a year in 5 years' time at, leading returns on investment. We can fund all this through our own cash flow. And by the way, we've got 21 rigs turning, so...
Drill early, drill often.
Yeah, Sean Roosen, what excites you most about your company?
Actually, I'd like to see Mr. Boyd say the words because I'm going to be very short in my culmination. So Sean, he has the much bigger company, so I defer to Sean on this.
Okay. We're excited because we have two big parties this year. We have a party at Meliadine and we have a party at Amaroq. The Meliadine party is in June. It's a community feast. And the Amaroq party is in August. And that's when the community comes together with our people that are opening up 2 new mines. And we get to celebrate what that does for our shareholders, but also for the communities there. And what that will do for Agnico from an investment perspective and financial metric perspective is in a very short period of time, there's an inflection point here in earnings per share, in cash flow per share, and in net free cash flow. And so our people have worked really hard in a challenging area, but now we're going to shortly see the benefits of that. And it also is important to us as Canadians to have this emerging platform in Nunavut, where it's one of those unique places in the world where you have Indigenous people that own a big chunk of that land that are in the resource development business, because they have direct ownership of 18% of Nunavut, which is 3.5 times the size of France. So they are looking for companies like Agnico to help them develop it, and they're looking forward to seeing the benefits of this as well. So it's a big year for us.
Great.
So once again, I just want to thank Sean for having allowed us to create Osisko Gold Royalties, because without Sean, businesses and industry don't exist without guys like this. This is a quality person that has come to our industry and has had a big influence.
Okay, $25.
Looks like I'm getting a haircut tomorrow. But in addition to that, I mean, we've been able to in terms of creation, we incubated Osisko Mining, Osisko Metals, Osisko Gold Royalties, Barkerville Gold, and most recently, we've been the biggest provider of capital to Victoria Gold, which is building a mine in the Yukon. And I encourage everybody to look online. We're 85% complete on that mine build, and it will be the largest gold mine in the Yukon. And to put it in context, we have 450 people in our camp at Victoria Gold, and we are the 4th largest community in the Yukon. So much like Sean, we are building into the north. We see ourselves as being partners with First Nations for a long time, and our real strategy is to continue to build quality gold mines on the Canadian side, especially with our First Nations partners. Very simple plan.
Perfect, great. Maybe a little bit more in the detail, also with all of your 3 companies. When we did the TV interview today, and I asked you in our pre-talking, but I wanted to ask you about your impairment charges. You were like looking at me and saying, wow, you are the first one who is asking me this as a journalist. And I said, yeah, I think it's really important. Maybe I think we should post that also here to the audience, because I find it really important to talk about it, because I think we saw with the real big mining companies, a lot of value was, let's keep it the hard way, destroyed Yeah, and I saw in your impairment charges, aside of your outstanding cash flows, rising the dividend and all of that. So my question is, first of all, why have you done it? And to my understanding, it is a little bit of, real honesty. This is how you are working, because you were valuating your, let's say, those mines, you have done the impairment charges to, let's say, a value which is more realistic today. And I really appreciate this as a shareholder.
Well, that was largely around the acquisition of Canadian Malartic. So it was really an allocation for accounting for accounting purposes. Under IFRS, you don't amortize goodwill. So we had goodwill on the books related to the acquisition of Canadian Malartic, and ultimately it gets impaired as you mine out the deposit. We didn't have the benefit of including the substantial resource that's being developed there. You do these things at a snapshot at a point in time, and we took a $250 million impairment of that goodwill, which was strictly following the accounting rules under IFRS.
Mm-hmm. Perfect. So it's a real goodwill impairment, what you have written off, and I think this is real honest, because if I compare it to DAX companies, for example, in Germany, they have taken off 2 years ago, and I think also last year, between 0.2 and 0.3% of their whole goodwill. So I like that.
Now, the question was, Yamana took an impairment as well, but Yamana's impairment was around 50 million. Yeah. People say, why the difference? Well, post the agreement, our stock went up a lot, Yamana's stock went down a lot. So you book them on the close, so we have a much bigger goodwill than Yamana.
Yeah, that's right.
Yeah.
Mick, question for you. Working also in the Philippines, what is going on there? How do you base your success on that?
Well, thankfully things have quietened down a lot in the Philippines. It's business as usual. It's always been a very noisy country in terms of statements and things coming out. The government's been fairly unpredictable, at least the head of the government there, over the last couple of years. But the bureaucracy that works underneath him is actually working better than I've seen it work in the 8 years I've been involved with the country. So the relationship we've got with the MGB and the Department of Environment and Natural Resources is very strong, and the dialogue is constructive. The new secretary that's there is who replaced the woman who kind of went mad. Sorry, I shouldn't say that. He's quite constructive. I mean, he has meetings with the industry, he has meetings with companies, he has meetings with the chamber on a regular basis. And so there is real commitment to cleaning up the industry, because there are some bad actors in the Philippines. We fully support that. And making good mines like ours more successful. So we're very happy to be there. It has had its headaches over the years, but through all of that, the mine at Didipio and the team there have never lost a day's production in not 1 day's production in the 6 years it's been going. So it's a great credit to the team and the company. And look, I think it speaks a lot to this whole social performance piece. We wouldn't be able to do what we do in the Philippines if we didn't have an absolute focus and commitment on the benefits that go to local communities and the government, and being a good steward of the land that we've been asked to develop. So you just can't do that stuff. You can't do what we do unless you do that really well. So the ESG, as the investment world call it, is absolutely essential to our future success, whether it's in the Philippines, whether it's in New Zealand, where it's equally as important. We can't get permits without social support. And even in South Carolina, the state governor said to me, he was an anti-mining guy from way back, he said to me, if the local community didn't support this mine, you would not have a permit, you would not be here. So it's the same wherever you go. And that's the importance of doing this stuff. It allows us to be in operation, it's doing the right thing. And investors should have a same social conscience, invest in companies that do the right thing. So I fully support this movement towards responsible investment, just as we have responsible mining.
Fantastic. Last question also for you, Sean. You have 85% completed of your latest baby, I would call it, Victoria Gold, which is a big success. We saw a beautiful video yesterday on your dinner, which was really, really impressive what you guys have built there. A lot of money, over $500 million you have taken in your hand. So what would be, let's say, the next big baby going into production? You have 19 assets now cash flowing, over 130 assets. And how many assets do you think you will have cash flowing to you, meaning adding to your ounce collection within the next 3-4 years?
Well, I think where we fit is that we're a pipeline company in terms of our accelerator model. We have a bit of a race on the go right now. I would say that Windfall and Barkerville are the closest ones to production. Both those companies are sort of sitting north of 3 million ounces in overall resource. They're high-grade underground developments, and I think that as we get into the permitting part of the process, that we'll see those assets evolve. We obviously have a big resource sitting at the Horn 5 project, which is 6.1 million ounces of mineable reserves, gold equivalent. But I think it's going to take us a little bit longer to get the permit on that. So I think that keep your eyes tuned. We have 21 drills at Windfall. We have 8 rigs at sitting at Barkerville, and Barkerville has an existing mine site, an existing mill, and we'll try and creep up and get back into production on that site as we go forward. And obviously, Mr. Boyd's expansions at the Canadian Malartic site are helping us a lot as we see the evolution of that mine site as we get further into the Canadian Malartic story. So, we've got a lot of growth in our portfolio as we go forward.
Perfect. Perfect. Thank you very much. Thanks to all three of you guys. And I think it's time for question. Patrick, you have a microphone? Where's Patrick? Hello, you have one? Yeah, questions, please. If I see any questions here somewhere. Please raise your hand if you have a question, because it's very hard to see. Oh, there's one. Please wait for the microphone.
Yeah, my question is about the big mergers and the talent freed up by the big mergers. So would you see it as a chance for mid-tiers to find qualified staff, maybe middle management?
Speak louder, please.
So the question was about the talent freed up by the big mergers. So is it now easier for mid-tiers or smaller companies to find middle management staff, for example?
Who wants to answer? Sean? I don't know.
Yeah, we don't see that as something that is going to help us in any way. We're not in the market to add a lot of skills, and I think what we do see with these big mergers is, despite what's being communicated, there will definitely be a shrinking of head offices. But the way forward is actually to manage and reduce overhead through the industry, not to add overhead. So we're certainly not in the market for talent that may come out of some of these big mergers.
Yeah, we've got a slightly different experience because we're building a business in North America through our South Carolina asset, and we've just established an office in Denver 12 months ago, which was a fairly timely decision. And we're getting plenty of inbound calls from Newmont and Barrick people looking for opportunities. But where we do need, and I guess where we can benefit, is upskilling our workforce in the US. There's not a lot of gold mines on the east coast of the US, So we're quite happy to attract people from Nevada and Colorado to come and work for us. So yeah, we do get inbound calls on it. It's just an interesting dynamic at the time, and it'll help us with our ambitions to grow the business in the Americas.
So I would say the following. The Osisko crew are known to be a little bit tribal. We tend to make our own people and promote them from within. We look forward to seeing outside talent, but it's not something that we put in our calculation in terms of attracting people. We are more of an organic growth company. We want to see people and their families come through the ranks and build our company in a very systematic way. We're not a hire and fire crew.
Okay, great. Patrick, another question? Sorry? There's one down there. Here. Mein Rat. Good.
Do I see that correctly? Maybe that's more to Sean Boyden, that the other large producers struggle much more on a 5 to 10 to 15 year term to replace their kind of affordable production ounces compared to you?
Yes? Is there a question there? I think what Barrick's an interesting experiment. 9 million ounces in annual production, 26 mines around the world. They concluded that nature was working against them and that it was going to be very difficult to replace 9 million ounces a year and sustain that level. They downsized or right-sized to 4.5 million ounces. Now they're at 5.5 million ounces with the acquisition of Randgold. Even that level gets extremely challenging and difficult in an industry that's only becoming more challenging and difficult to replace 5.5 million ounces. So we're at a level now, 1.6 last year, 1.75 this year, 2 million next year, ultimately 2.2, 2.3, 2023-24. So nice steady growth, and we can replace that. It's still a level that you can still build a quality business and replace that annual production. So we're not in a big hurry to get a lot bigger, and that's why we're not sort of interested in buying production and never have really been interested in buying production just to create a bigger challenge and a bigger problem in a tough business.
You want to add something?
So I have a little bit of success having sold a few assets to Mr. Boyd. We just drill and create new ounces, and you know, we set out to be a pipeline company, and we've took over a lot of brownfield camps across Canada. We now, our royalty land and our accelerator companies now cover 15,000 square kilometers in Quebec and Ontario, and about 5,600 square kilometers in British Columbia and the Yukon, which, if you add it up, is 3/4 the size of Belgium. So our plan is really just to be an executor of drill out, build ounces, build mines, and we'll see who ends up being the owner of those assets. And if it all goes well, Sean and I will have one more breakfast on a Sunday morning.
Perfect. Nick, you want to add something?
No,
There's no breakfast booked at this point, just so we're clear. For the regulators, we have no plan.
no, only that I think there's an optimal size to a gold mining company where you maximise your return on investment and be relevant to the market. And there's a nice point there somewhere between 500,000 and 1.5 or 2 million ounces. So, having too many mines is clearly difficult to do, and I would have thought people have learnt their lesson by now.
So one more question, maybe. Whoops, here's a question. Oh, there's also one. So we make this one and then that one. Is that okay? Because he's already standing there.
Yeah. Where do you see great potential for the next wave of big gold discoveries, are you more focused on greenfield or brownfield exploration?
Okay.
I'm happy to go first on this. I think that most of the ounces are going to come from brownfield. Unfortunately, greenfield has gotten extremely difficult. Around the world, all the obvious targets have been hit, Australia being a prime example. It's just not that easy to find a greenfield discovery anymore unless you're in Afghanistan or someplace else that's had a lack of exploration due to some social issue. In Canada, everything that we have left to discover is usually undercover. The case is Windfall, where we're drilling under swamps, and we're not, nothing that we've seen there has been a eye discovery. It's all been a blind drill. So I think that brownfield camps like Malartic, like Kirkland Lake, which Mr. Boyd and his crew are exploring right now, and some of the others are going to deliver all the best ounces. And we know that at the end of the day, mining is like real estate. You're either on lakefront or you're on downtown prime real estate. And if you're not on the plumbing system, you can't find much. So some of the game is already understood, and we have a lot of science left to do. But our focus has always been to get into brownfield camps and try and figure out what people didn't understand before.
Mm-hmm. Okay, yes.
How much potential do you see in robotics in the future of gold mining concerning, the productivity, the production return, etc.?
Mm-hmm. Interesting.
Well, automation is certainly critical and important, particularly in the context of an underground mine. And we're using remote control equipment. We're moving towards automated vehicles in the deep part of LaRonde when we're mining currently down to 3,000 meters. So it's safer. It certainly keeps the cost down. There's still a lot more work to do, but that's just part of the constant battle to optimize and improve efficiencies, is to employ technology. For us, we're focused on automation, but we're more focused on renewable energy, particularly in Nunavut. That's our biggest potential win, because it currently costs us 30 to 35 cents a kilowatt hour to generate power in Nunavut. We're paying 5 cents a kilowatt hour in Quebec, as you know. And there are alternatives in Nunavut for us, like wind-generated power, that we're working on. So all sorts of new technology the industry has to be on top of just to keep our cost structure competitive.
Mm-hmm.
So we're investing a lot of money in automation for the same reasons. There are definitely productivity gains to be had by automating the core pieces of machinery in an underground mine, such that your drills, where you're drilling out stopes or drilling out headings for jumbos, can operate 24/7, just like a machine. So you can basically pick up 30% productivity in your underground mine just by having them automated. So now the talk is, there's evolved to a point where the operator is now the supervisor, and the operator is now the machine. The guy that was the operator, or lady that was the operator before, is now the supervisor and a technician. So there's a shift in thinking, and the whole point is to keep these machines operating 24/7. And it's an incremental process. As technology improves, we'll be able to automate the loaders, so they automatically load the trucks, which automatically go to the surface. And I envisage, and it's a challenge I throw out to our people in our industry, that by 2050, no one should be working underground. Because if you think about it, 30 years ago, people used to accept that people would die in an underground mine because it's a hazardous business. If you think 100 years ago, people died of lung disease, they died of all sorts of ailments because they were miners, and that was accepted. Well, today it's not accepted. And in 50 years' time, or 30 years' time as it is, people won't accept people working underground because it's too hazardous. We don't want anyone getting hurt underground. So that has to be the vision, that has to be where we drive the business, and it's really pleasing to see the advances that are being made in technology in the last 5 years, and that's all it is. The 5 years, you know, through wireless technology, we can connect up the whole underground mine. You put your leaky feeder cables down the middle, so machines talk to machines talk to people, right? And people talk to people. And you can do it all from surface, right, in the bigger scheme of things. So it's all possible. There are advances to be made in technology, things to overcome, there's challenges to overcome. And there has to be a different thinking about the way underground mines are designed, such that they accommodate the most efficient machine operating environment. That's where it's going. And it's very pleasing that we're making some good progress. What we're doing at Oceana is we've partnered with Sandvik, and we're piloting automation, taking the early steps of automation of our equipment underground, and also digitise what they call the analytics world, so the big data, you're collecting all this data and using it. We partnered with Sandvik to create a model at Didipio, which we are going to implement at our next 3 underground mines, which we're doing over the next 5 years. And so each one getting better on the next one, on the last one, I should say. So yeah, it's an exciting time, but there is a big picture vision there that we all need to strive for. And essentially, you know, we don't want people exposed to hazards, and it's not about replacing people's jobs, it's about upskilling. So the operator it's not about the operator losing his job, it's him being the technician that fixes the computers that drive the machine. That's where it's going.
Sean, you want to add something, or you're fine?
No, I think I'm in agreement with everybody here, and
Yes.
I would only add one sort of caveat, is that artificial intelligence is known to match for natural stupidity. And that you know, we still have to produce businesses that make money. So this is all evolutionary, and we will be part of the solution, not part of the problem.
Great, perfect. So I just got the sign, fantastic. Thank you very much to all 3 of you. And also I want to thank you again in the name of the homeless people of Zurich for your very generous donation. I think that's a big applause.